Now we're going to discuss options for saving for long-term care that do not involve buying insurance. The most popular way to do it is to do it yourself or to self-insure. Self-insuring is also the default plan for those who need care and have no plans for themselves. There are two ways to self-insure. First way is to plan and save money over time. The other way is not to plan at all, don't save anything, but to pay the bills as they come in each and every month if someone should need care for themselves. If you want to self-insure, I will first give you the steps and then I'm going to give you an example of how a person would do that. Let me just say, this is not financial advice. At MAGA, we are not financial advisors. Here are the steps to self-insuring. Starting with the current industry estimates, calculate the amount of money you want to have saved and the year you want to have it saved in. Next, you'll write down any savings that you are willing to dedicate to long-term care planning. Then you'll subtract that from how much you want to save, and that's how much you will still need to save. Next, you'll count how many months there are between when you start saving and the year you want to have enough saved. Then you'll divide the amount you need to have saved by the number of months you have. That's the amount of money you should have saved each and every month. You can also convert that to years if that's easier for you. Pretty simple, right? Here's a fictitious example of how to explain how it works. John Smith is a 50-year-old male. John assumes he'll have a long-term care event as early as age 70. He doesn't know, but he is picking 70 years old. He's using the 2018 estimates for long-term care cost and the healthcare inflation rate. John assumes he'll stay in a semi-private room in a nursing home that's estimated to cost a little over $89,000 in 2018. On average, a man's long-term care lasts about 2.2 years, and in 2018, the inflation rate of long-term care costs is 3%. After calculating it out, he'll need about $354,800 saved by December of 2038 when he will be 70 years old. He doesn't have any money or assets he's willing to put towards long-term care, so the number of months is 240 if he starts in January of 2019. John would save $1,478 per month, and that would equate to $17,741 per year in savings. That gives you a short introduction to self-funding and self-insuring. In the next video, I'll discuss other alternatives to long-term care insurance.